All right, guys. So we're just gonna get right into it. I'm just gonna go in alphabetical order, starting with AMD. And I know Rocky mentioned this. He wants me to break stuff down a little bit more. So for people out there that may not understand stuff to like the complexity that I just like go through and not really get in the detail, I'm gonna actually like explain this a lot simpler, just for like the overall people that need to learn like how do you find resistance, how do you find support, and how do you basically like just chart in general. None of like the I don't want to say advanced stuff, but just stuff that a lot of people don't do. It's just the major zones. We're going to stick with that today, basically. So going off AMD and just like everything else that I chart, I always start on the major time frames. So like the daily, the weekly, the 4 hour. I want to get an overall gauge on what the actual current standing is, because the last time we charted was obviously last Sunday. So we've had a huge breakout for chip stocks, especially AMD. So I'm looking at where AMD currently is right now, and I want to find zones historically just for now where we currently are with AMD. If we don't gap up or gap down into Monday open, I just want to put a line here. I'm going to delete these as I talk. So the white line I added around the 97 a share, basically 98 a share. I'm doing that so that when I zoom out and go back here, I can see like, okay, what zones around that area have rejected support or rejected, bounced on support, rejected resistance in the past. That's what I'm doing this for, just for like current statement on where it is basically. So just going off, obviously the first line I put there, we had a little cup and handle formation here and we curled. So the zone here that I put with this white line, we know that it has at least a bottom from historical. And then before we actually broke above that zone of about 99 a share, 98 a share, we had heavy selling pressure that happened back in 2020. So we know that where we currently are right now, we could see a reject in the current time, but we could also, if we break above and we hold, maybe we break above and like come back down to that now support and hold with buying pressure, AMD could curl, obviously with upside, just like it has in the past. So when I'm looking at this now, I stay on the daily and I want to zoom in on like these two main areas. This is how I personally chart. Like you guys can do how you feel is best, but I'm just going to show you like how I do what I do. So I literally just have these two double tops basically, and I have the white line above, which correlates to the current time with AMD for the price per share. I'm going to find just a relative area that I can put a line in here that's not really going to like interfere with anything, but more so just give me like a closer look at the daily frame from this double top back then. So I'm looking at like where candles fill, where they're not filled. Why is there an invisible line there? There we go. So I'm looking at candle fills basically. So if I put a line like around this area right here, and I'll make this red. The reason I put this here, so this filled candle, so with the red candle, obviously the top of the red of the fill is like where it opened up on the day. The wick shows the actual like where it went up and down, and then the bottom fill of the red is obviously the close on the day. So I'm going off the top of the filled red candle here, which is where it opened. And if I go back to the previous, which was the double top, you can see almost the wick of where it gapped up on those days. Like as it moved throughout the day, it pushed up, but it didn't close or hold at that level. So I know where it opened up on January 12th of 2021. We've had ranges that have wicked up to that zone of around 97 and 98 a share. So I know anywhere between this area, there was selling pressure in the past, obviously. We broke above on these two candles, but we came right back down those 2 days, and then we had a heavy gap down. So I keep this red just anywhere in it doesn't have to be dead on like with the wicks, the candles when I do this. I just want an idea of like, okay, anywhere where this red line is with the current times, I know that there was rejections because the stock was below and it couldn't break above. So that's why I put this here. You can do the same thing with like just below. You can like look for candles that wick up. You can find like heavy fills, wicks that all correlate. But that's like the main one I want. I don't want to have my chart filled with just tons of lines for no reason. I want major zones from the past that I can remember, like what happened basically. Like I want to know in current times without having to zoom back and see like why I put those there. Then obviously with the white one, I'm going to move this one up slightly because I want to have more of like a good estimate of where this white line should be, which current times is going to be the rejection if we go any higher. So I'm going to look for like, you see how these three candles right here are filled. We had two wicks just below with this red and this red in this area right here. So I'm focused on just like a more pinpoint area with where this green candle filled. Obviously, this red candle closed at that area. This red candle closed at that area. So we have 3 candles with about the same like area point. Does this make sense so far? This is how I chart. I'm going to keep saying that so people don't think that this is like, oh, you have to do this. This is just ways that I remember in current times. Like in the past, this has happened. It's opened here. It closed there on the day. It wicked below, but came back up. So I know this white zone around 140 a share on AMD is going to be like a bounce if it gets above, but also when it contests that $140 a share price, we could reject and come back down. So now I have 2 rough areas of 97.89 a share and 140 a share. I mean, $100.40 a share. So I'll slowly move back to current time and see if anything else correlates with those. You can see the white had a few wicks here. Wick below came up. The red has a few filled candles. So like you can see how this red line had candles that were actually fluctuating pretty close to where I put that from the one last year, basically in 2020. So I'm using that and seeing like, okay, has it happened more as I get closer to current times? So I check that, I move forward. Right here, we had a double top back to back, almost right where this red line was. So in doing this, I know as this line approaches or the zone approaches, if the stock's underneath pushing up, it has a reject because of selling pressure. This is one thing I do so that like historically, I know this zone is important. It's not just like if I go to the 5-minute or the 10-minute and I'm looking at AMD just on the day, you're going to be focused on like this high, the double top it open on Friday, obviously pre-market high, the wicks, like that's what people do. And I get that, but I want to see the overall perspective and then use the smaller frames to correlate the two, try and find like a medium point for them both. So just going off AMD now on the 2-hour, the red line is basically where we're currently at. And the white's going to be like that fill. If we push up, that's going to be a reject around $100.40 a share practically. So that's how I use that as like a good rough estimate. And then for looking at the 4-hour here, obviously this is going to be a cup and handle breakout. It's not ideally like textbook cup and handle, but it has that formation. It has the breakout, the huge green back to back. So if you want to try and catch a better entry for calls, look for a pullback, which this is a major pullback that could happen a week, 2 weeks, 3 weeks from now. But the 88 a share area between 87 a share could be a good support if you want to just not risk chasing this breakout, even though it could go if the buying pressure is there. I like to look at stuff from a safe perspective. So just going off of that, I mean, you can look at the daily again and just come back a few more days just from mid 2022, and you can just find other zones or what you feel you want to add on. But I try and keep current times and current share price only like 2, 3, 4 zones. I don't want to have lines just every 20 cents, every 30 cents, because what exactly are those going to do for me if like in the moment volume picks up heavy? It could easily break out of like the last week of like wick outs or a double top. So now I know historically, basically 2, 3 years ago, these 2 zones are very similar to where we are right now. So they're going to have a good impact on what could happen again, like it did historically. Does that all make sense to you guys? Me being able to break that down on the first chart, I'll be able to just like not have to go into depth for the rest of these now. And if anyone has anything like, well, what would you do about this? Or like, I don't understand, like I do it this way and it works, that's completely fine. I'm just showing you what I do. And maybe what you already have been doing, you could add on like looking at the larger time frames, or maybe incorporating your indicators, your EMAs, your velocity, and like whatever you use. I'm very zone based when I trade. I wait, I'm patient, I size light, and I enter where I have a huge reward possibility compared to the risk, which is going to be minimal. I like to keep it simple. I usually don't trade every day. I don't want to risk what I don't want to lose. I try and keep my emotions as intact as possible. So I'm going to Amazon now. I'm trying to not go into depth with charting. I'm trying to just like focus on main zones for this specific week, because I don't want it to be the same thing every time, just like the same charting, the same talking. So like I know Rocky wanted more in depth, like more reasoning. So I'll try and do that this week. And then as we go, if you guys have any more personal things you want to see, you can mention it in the chat. You can let me know so I can plan ahead of time. Maybe you want to see more pattern based and not even like current areas. You just want to learn more about patterns or the trend lines, anything that you feel that you want to like advance yourself in, basically. So going off Amazon, I know I'm going to keep this main falling wedge open until we actually contest the top or the bottom, whatever comes first. but I am still waiting to see this gap up on Amazon. I mean, logically, if SPY drops, Amazon's going to drop. That's just how it is. But if you're looking at the overall move that could happen, Amazon could keep pushing up, especially now that you guys understand how I use the historical stuff. I can put a line around this area because of this green candle, which I'll go to the 4 hour. We had a lot of hesitation here trying to break out on the upside. Hesitation all throughout this area. It's a range of about $2 a share, from about $101 a share to $102.50 basically. So I know just from the past, month and a half, we're going to be contesting this currently, which we are right now. So we're rejecting already. But the thing you have to focus on, when we've rejected before, buyers pick it up around that $98, $99 a share area to push it back up, to keep it in this little zone between 98 a share and $101 a share. Amazon always likes to range between this increment, and I've noticed that because I watch it a lot. And the main thing that I want to do now, these two white lines I just charted, what could possibly be back here that may correlate? I mean, right here we had heavy buying pressure. We had wicks, we had candles. We never broke below this back in basically March of 2022, all the way until July practically. So I know that $101 share area, if we break above and try and break on the downside, historically there's buying pressure. I know people are buying it up there, but now since we're below this share price, it could be selling pressure. We may not even break above that zone now. And we basically had almost 1, 2, 3, 4, almost 5 wicks or candles that held this up on the daily. And I'll zoom back. I'll just peep it, see what's back here. You never know. I know there's been splits since, blah, blah, blah. But I still like to see, okay, have these zones correlate in any other way. I mean, just like I said before, how it held the buying pressure, now there's selling pressure. So we've had that happen back in 2019. When we had a gap up in this area, we had a little bit of selling pressure, and this was probably an earnings report. We gapped up. There wasn't enough sellers to back it back down. Buyers bought after a gap up, which was earnings. So I know if we can break above that $101 a share, Amazon has room to push because buyers pop in at that share price practically. So then I'll go to the 4 hour, the 2 hour. I can take it down however I want, but I'm mostly focused on the larger frames with Amazon for this. Like if you want to get into the technical of how do I scalp this? How do I buy in on the day? Take it to the 15, the 5 minute, look at the last week, the 2 weeks on the smaller frames and see if you can catch a support zone that may bounce if it dips that low. I mean, right here, we practically had almost a double top. And that is going to be around $96.50 a share. Could we drop that much? It's almost a $2 drop. And then we also had right here in pre-market, you can also use this as an addition. So this whole thing right here, if we pull back, it's a good spot to get calls because we saw selling pressure when we tried to break above. Now that we're above that zone, pulling back to it will bring in buyers. Does that make sense to everybody? If a stock's below a zone, that's always going to be a reject. There's resistance. When the stock breaks above, that new resistance is now going to be support for it, basically. That's how I personally like to enter stuff. Like breakouts are fine. I've done it. I get destroyed every once in a while because if you buy a call in the breakout and it has a slight pullback, you're going to have to hold. If you sized heavy, emotions could get involved. So I like to try and catch calls on heavy zones on the downside where I see it holding, not just oh, a wick hit, I got to buy in. I want to see the volume increase. I want to see the buyers increase. I want to put risk minimal. So I like to get calls on those support zones that start to curl slowly. Yeah. So he said, would you make your entries based off the 15-minute? I love to watch charts on the 15 and 30-minute, and I usually never play open in the market. I hate playing the first hour because I like to see what the volume does the first hour and then correlate that as we go into lunch hours and then power hour, maybe even after hours for the next day to see if volume had weird, unusual buys. Yeah, I like to wait for the market to structure. A lot of people, and I don't mind them saying this, they like to play open because the velocity, the moves are heavy if you catch it. I like to play smart and safe. That's just how I am. I'd rather have one solid play for a win that's 25% than try and catch a play that could go 50, but if I'm wrong, it could drop 50%. I am not in a rush to make money when I trade. I just want to be as my win rate is way higher than my losing rate practically. And the losses are going to outweigh the wins, even if I'm 5 losses to 1 win. I've recently switched to after 12 p.m. the trade market. Yeah. I love trading after lunch hours around 12 p.m. and later on Eastern. I love to start trading around that time. You can see what's happened on the day. You can find double tops. You can find like the VWAP confirmation with like how the stock moves around it. That's just how I am. That's what I like to do. I've played open. It's fun. It's adrenaline rushing, but I just can't stand it because my losses are heavier at open compared to after hour, like after lunch, basically. Yeah, you can use pre-market structure. And I'll give an example. Let me see if I can use Amazon. I know one stock will show me something I can use. Because I mean, like a lot of people that I've shown stuff to, they'll use this method. I don't know the actual name for it, but they basically use the pre-market high and the pre-market low to determine the open price of a stock when it starts to move. And it's all probability. Like nothing's guaranteed. Volume can just hit and it could take off past pre-market high. There's a few people I know that they'll actually look. Let me do highlights instead. They'll look at the pre-market high wicks, the candles, find a good zone, and they'll get puts if we hit a double top at pre-market high practically, which obviously Friday for Amazon, it would have been a killer play if you would have got puts on that. But that's the risk they take. They size light for puts at the pre-market high reject. And if they are wrong, they size light enough where if they're down 50% on a huge volume push, it's not bad for them since they size light. But if you're right on a play that your size one contract, one win is going to outweigh a trim, or like a sell loss that you have if you're wrong. So basically, like if you get a put here and you hold this trade down, at least I'd say $1.50 a share on Amazon. So if you bought the high at around $100.40 and you sold the contract around, let's just say $99 a share dead on, it broke the pre-market low or the open low, pre-market low, you sold there just to be safe. That one win could outweigh what 4 or 5 losses that you manage the risk on for a like us. You sell it soon. You don't hold it to zero. You trim it quick because you know, okay, it broke above what I said I wanted to see whole reject and drop. So I'm going to take advantage of that. I'm going to stick to my discipline and my plan before I actually hold this to zero. Rocky said, generally when the stock touches your resistance level, you would like to enter puts, but there is also a chance it might break and there might be buying pressure. So after it touches the resistance level, do you wait for any other conclusions to enter the trade, or do you just enter and have a... So basically, no, that makes sense. For me, I like to see the 15 or the 30-minute hold at these zones. Because if you're on the 1 minute or the 5 minute, the 2 minute, there's so many candles going on that like if you get like back-to-back heavy candles, you don't realize on the larger frame. No, it always zooms out. You don't realize on the larger frame that when you look at this stuff, there's selling pressure on the 15-minute. I mean, look at this red candle. It ran up, but there were so many sellers that came right back down and basically it finished lower than where it even like went up. That was almost that was over $1 a share candle on the 15 for Amazon. That's why I like to look at the larger frames because I see the overall picture and not just, okay, let's go to the 2 minute. That 1 15-minute candle that you just saw with the huge wick upside that went down, it looks like we're going to send it open. That huge green candle, you could be thinking, oh, it's going to send, I have to get calls. Next thing you know, 2 red candles, you're right back down. For me personally, the overall picture does help not get faked out. It also teaches you patience because when you see on the 2 minute, like look at these green candles. There's 1, 2, 3, basically 4 back-to-back green candles on the 2 minute for Amazon here. Your emotions could be saying this is going to break out past the open high. It's not going to double top. Like there's too much pressure on the buying side. If we're looking at the 15-minute for that, when I look at this now, I'm patient. I'm waiting. That heavy back-to-back 4 green candles on the 2 minute is this 1 green candle here. So I wait for that next 15-minute candle to form and see if we break upside. Because we could always break up the first 5 minutes of the 15-minute candle and then come right back down. That's enough confirmation for me to say, okay, for this candle, I'm going to enter when when the wick goes up and starts to slowly trend back down. I can enter puts there because my sell loss is mostly the break of the actual high of the day, or if the wick that just formed on that 15, if it goes back above that, I'll just sell right there for a very small loss. I mean, I'm waiting. I'm on the 15. I want to see the 15-minute candles form. I don't just want to see them move. I want to see like 3, 4 of them all line up at resistance, all at support. I want to see it actually show me something. I don't want to have that hope of like, this is about to just take off. Because right here on the 15 and 30 minute, I mean, Amazon doesn't look that strong. The 30 minute, it looks weak. If you watch the 30-minute open on Amazon on Friday, these candles were just zoning. They pushed up. But once it finally showed selling pressure, you could have entered puts on this third candle, that major red one. You could have entered there. And basically, if it breaks the high of the day, that's your sell point. At least for me, that's how it would work. And then while you're watching this 30-minute candle just slowly came down, 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 down. I mean, it calms me down looking at the larger frames. That's how it is for me. It helps with fake outs because you're not like emotionally attached to a candle. You're more so looking at the zone at that point. If anyone has any questions while I do this, let me know because I got to fly through the rest of these now. But I'm just gonna focus on like the overall zones and whatnot. And if you want me to go back at the end, I will gladly do that. So keep stuff in mind if I skip something over or you want to see more of like, well, where would you sell? Where would you enter on this? I'm going to try and get through these and we can go back through on whatever you have questions about. So Baba right now, obviously we broke the, I know I talked about this support. I think it was 2 weeks ago. I don't know if we talked about Baba last week. I don't think we did. But I was telling everyone that like this support is going to either bounce heavy or it's going to break on the downside. And when I talk about this support, here's the buying pressure right here. We had a few green candles. Like obviously this is all chop. It came below, went back up, rejected, went back above, held support. It's a lot of supply and demand zone versus support and resistance. So I don't use supply and demand words very often, but I'm pretty sure like if someone may need to correct me, which one like demand and resistance go together, correct? Someone help me out here because all I use is support and resistance, but those four terms literally are like the same, if that makes sense. That's one thing I should know. That's basic stuff, but I never use supply and demand as terms, honestly. Someone should say it. If not, I can look it up real quick. But yeah, so Baba, I was talking about how like if this support breaks down, it's going to be basically a stair drop. And sure enough, once we had that selling pressure that broke Baba in this bear flag right here, and I'll make this highlight yellow. The break on this is literally what made it free fall. Because at this point, with this support breaking, historically, when that support breaks, we have a gap down. We have a little run back-to-back days, and you can see that. I mean, the last time we broke it pretty bad, Baba had a pretty decent drop, and it was almost, 6 days back-to-back of green practically. I mean, of red practically on the downside. And that's basically where we are right now in this formation. So when I'm playing Baba at this point, I missed the initial breakdown. So I'm looking at where can I enter for the lowest risk on puts, but also for the lowest risk on calls if I want to play either side. So when you're looking at a bear flag, just like the one up before that broke, you're looking at where it wicks a lot, where the candles reject day after day after day. You're looking for like that zone you can fill light, because if you're right, that light fill is going to print and give you a big return. If you're wrong, that small size is not going to make your account drop a lot from that loss if you have to cut. So a good zone to look at for Baba for me would be around 84.50 a share to 85 a share practically. Anywhere in that area, if we push and we show on the larger candles, like it just sits up there, it wicks up, comes down, it wicks up, it comes down. You can start to size light for puts on that if you'd like to, or you can wait and see if Baba breaks above. Okay, resistance and supply are the same, and the demand and support are the same. Demand's where people want it, supplies where people want to get rid of it. So basically, like if you want to wait for calls on Baba, you can play the bottom. But the only issue with that is, and this is a really good example to show this, where is the bottom at this point? Like where is going to be a buying, like where's the buying going to come in if this keeps downtrending? That's the hardest part for me. So when I miss a move like this for puts or calls, I usually wait a few days for it to form, maybe show something that's like unusual, maybe a heavy push back to this blue. Because if we get a heavy push to this blue and it rejects, you can look at playing puts just for the gap fill back to $80 a share. I mean, 86 to $80 a share, that's a relatively good drop if it does have that selling pressure. I'm going to stop talking there on Baba just so I can get through the rest of these. Okay, this is Google. So I have not looked at Google in a while, but I do know tech is hot, obviously, because it's had a big push back to back. So I'm going to start on the daily, like I was talking about earlier, and see if I can find an area. So right away, I see this right here in historically, back in 2021, this was an earnings gap up, just like how Amazon did, and it held all buyers. Every time it came down to this zone, it held buyers. So I'm going to put a support line zone basically where the candles or the wicks all correlate relatively well. Anywhere in this like zone is good. It doesn't have to be a pinpoint. Just know historically this is going to be a zone that matters. So I usually try and put it not at the very bottom wick in the whole zone, but just somewhere relatively close. So right here we have, let me shorten this so I can highlight this over. If it will even let me, there it goes. So we got a few wicks here. We got a red candle that filled there, but it gapped up overnight. We got wicks here that wick down, came back up. The starting point after earnings had a wick, but it held. So I'm going to keep the line there around $101 a share and 13 cents. And then we're going to take that. I'm going to go back to the current time now and see like, okay, where around that zone has it done the same thing? And just going off, I'm going to go to the 4-hour now so I can see a little bit better, closer to where we actually are. We've had rejects where the zone is. I mean, we had a wick up for about a day or two here, but it came back down, tried contesting again, made a lower high, then it free fell. And then not even, 3-4 months later, double top. And then finally the third contest is where it broke out. And then once it broke out and it came down, it didn't hit that zone close, like very close, but it was enough where it showed there's buying pressure anywhere in this area. And now when I look at this in the current time, we just broke above that zone. So for me, when I'm thinking as a smart trader that I'm cautious, I'm taking that precaution and not force a trade, could we be wicking above and we're going to drop right back down? Could we hold here for a few days and then slowly curl up to the upside and contest like that $110 a share area on Google? So I'm not in a rush to make a trade on this. If you want to hope for continuation, you can buy calls on a Monday morning dip and then ride it up. But this is when my patience comes into play. This chart setup already had that breakout because you want to look at this Thursday and Friday. Thursday, we had the actual reject, and just before after hours, we had a red candle coming down. The very next day, we held and pushed. You could have played this breakout if you caught it. The issue with that is it could have rejected. But just using the smaller frames now in the 15 or whatever you want to look at, you can use the pre-market low and also the lower high from Thursday to try and find like a smaller pinpoint. Like if you want to day trade this, you want to scalp it, you can use where Google ran on Thursday. It had a slight pullback, but it never broke back down where it was running. So you can use this buying pressure for Friday and see, okay, let's see if it holds pre-market. Let's see if at market open, it doesn't dip below, it just takes off. You can try to play this, but for me, I don't play open, so I would not do this. But for people that like to play open, you can try using the strategy with the pre-market low, the previous day buying pressure after higher lows were formed. Like that's the stuff that you can take into consideration when you look at the smaller time frames for a scalp or just a day trade. I mean, because even after it had that push, it basically just consolidated. So now going into Monday, if we get a dip anywhere in the 101 and 13 a share, 99.9 a share, you have two zones for support at this point. And obviously the high from Friday could be your resistance. And then going back to the 4-hour, we know when we're above this zone, we have buyers because when we're below it and we push up, there's always selling pressure. So if we hold above this $101 a share, 13-cent area, we may curl and push more to make this tap out around $108 a share possibly. Google may have potential because tech is very hot right now. You never know what could happen. You also got to incorporate the overall sectors as well. See what's hot on the day. If tech is hot, communications is hot, Google, Meta, they're going to push. That's when you can use the FinViz stuff with seeing what sector on the day is hot, what stocks within the sector is hot. That's when you can learn some of that kind of stuff. And then Meta, a lot of people have been watching Meta because I know the speculation with TikTok getting bought out by them or any tech company, but obviously Meta's in the talks right now. Like it's the retail talk. It's not actually like going to happen, but we never know. So just on the daily, I know I talked about this last time, but we're in a cup and handle. We're having that pullback of the cup breakout to basically the brim. So this could either set up for a nice call entry tomorrow or Tuesday if we hold that support and we can push, or maybe we fail that and we come right back down. You can play the put side on Meta as well. So there's two scenarios with this. For me, when I'm looking at this, I'm going to put one line basically around this area. And the reason I put it here is because these two candles double topped and rejected. About a month later, we had basically a 3 to 4 candle reject. So selling pressure was hitting. If we go back, we had buying pressure here after we dipped to it. And then we also had good buying pressure here as well on support. So I know anywhere in this zone, it's not a pinpoint. I'll keep saying this so it gets stuck in your head. It's not a pinpoint when I put these lines in. It's just a rough estimate. So I know historically anywhere from 182 a share to 184 a share, 185 a share. This is a zone. This is going to be important. So now going to the current frames on the 4 hour, we can use that with where we are right now. So it's lower than what we are currently. We're at $195 a share practically. It's almost a $12 drop, but we know that's going to be a main support if it has a drop like that. So now when I look at this on the 2 hour or the 1 hour, I'm charting just in this cup and handle formation, just this pattern right here. That's what I'm focused on now. So when I'm looking at this, we had heavy selling pressure that wicked almost 5 days back to back right here. If we correlate this to historic, like recently, we had a reject here that pulled back, but then the very next day we ran all day. The day after that, when it tried to pull back down, it had a wick and push back up. And now we're currently right at that zone. So I would take this and you can put a zone anywhere. If you want to do the double top wicks up here, go for it. If you want to put it down here where it had the filled candles and a few wicks, you can do it there. You can lower it more if you like. This is when it's for your comfort. A lot of people like to take the highest points and just say, oh, if it breaks this, we're going to go. I like to look at the overall zone where it like touched multiple days, multiple times it had contests and may have wicked on the 2 hour and then came below, may have wicked on the 30-minute, came below. So this zone for me is what I would focus on between 183, 192, but the 192 is where it's heavy. And if you want to, this day when we rejected down through the 183 and started to form that cup on the bottom, you can put a line in between here just because the pre-market basically held and then right away it opened, it rejected too. So you have basically, I have 3 zones that I could use right now. If you want to color coordinate them, you can. Usually like the highs, I'll put like orange or yellow. So I know like if this breaks out, we're going to push. And then for the bottom, I'll use like red or something. So I know like if we touch this, it's support, it's red, possible chance of buyers coming in. But if we break, like we could like just bleed. It's going to go on the downside. So then you have these zones. And if you want to take this white one and move it up to this area, like this is the zone anywhere in here. You're looking for a good estimate of where you can put something where buyers will appear. And these are the 3 that me personally, I'm going to keep for tomorrow. And I'm going to see how it works out, see if I was right, see if I was wrong. I may not trade meta, but it's always important to look back at like your charts and just see how accurate were you. Like really find what worked. Like, did you do good at this area? Did you do good at this area? Because if you chart like this every day, and say like out of all 20 charts you did for the week, 15 of them aligned where you wanted to get calls at the bottom and it pushed, start executing that. At that point, you're following lines you already charted. You're not having to look at the candles and like get emotional, like, oh, it's coming down, I need to watch out. You're waiting for these zones to hit. And that's how I trade. I wait for the zones to come and then I'll start looking at the chart. I don't just sit there and watch it because sometimes emotions take over. You'll chase puts on the downside. You'll chase calls on the upside. You totally forget to look at zones because you're so focused on the money to be made, you don't want to miss it. So I just sit here. I let 9:30 open till about 11:30 a.m. noon for lunch hours. Then I'll start looking at charts, like have my zones touched? How are the charts aligning where I can see a pattern that may play out in my favor? That's what I usually do. So for meta here, I'll repeat the levels: 192.28. 188.99 and 183.64, anywhere in those zones. It's not dead point even. It's just I have those there for like a visual eye, basically. And now we're going to look at Microsoft. And just like Google and Meta, tech is hot. So this is obviously running. So I'm going to go to the daily first to get a good overview of like what is happening. And I do have a lot of lines on the upside. As you can tell, I used to chart this when it was at all-time highs. I'm going to delete just a few of these. So with Microsoft, obviously on the daily, we've had massive candles. So we're breaking out right now. The first thing I visually see when I'm looking at this chart on the daily is this trend reject right here. This is one thing I'm focused on. You want to find stuff that's on the larger, because the larger frames to me speak more volume, like not volume buying, but just like more perspective. The larger frames have more perspective on the overall move. So knowing this, we had a heavy green candle wick and we pulled back into the day, it looks like. And if we go to the smaller frame, we can check it real quick. So we pushed it open and we rejected and then we kind of just consolidated. So just going off that on the 4 hour of the daily, this could be a good put position if tech cools down. That's the thing. Not just Microsoft, but overall tech cools down. Historically, it rejects this trend. Does this all make sense? If you take the trend away, it looks weird, but when you add that in there, it kind of looks like a resistance trend with this like rising wedge or like higher highs forming. So that's one thing I noticed right away. So at this point now, I'm looking for zones. Like what zones have rejected historically? And this stands out to me. Earlier in 2021, we had obviously the bull run. We had a pullback that held right here. Then we pushed the all-time highs. Then we started to reject. So I'm going to put a line where this pullback was and see if it correlates anywhere going closer to the current times that we're going to be at. I don't want to use the lowest wick. I want to use the area that has like the most candles, the fills, the wicks. So I'm going to do it around the green and the red, basically bottom of the candle, if that makes sense. I don't want to just do the wick down here. That was a fake out. A lot of the time, a fake out like this is not going to dip that low. So it may only go down to like 278 a share and not actually touch that 276.45. This was a stop, like a wick out. And I guarantee you, if people had calls this day, they sold just for the push right back up. And then it gapped up the next 2 days and ran. So I'm looking at the zone average basically. So I'm going to put mine in this area, anywhere between 279 a share and 278. I'll do it like somewhere in the middle just for like a median. And I'll make this, let's go yellow. So I'm going to take this now and slowly move my way back to current times and see if it had any action in that area. Obviously, a lot of these wicks fell way below. So it's not very pinpoint in this area right here. There's a lot of just zoning. 270 a share, 275. A lot of wicks came down and pushed right back up. So we know in this area there's buying pressure, but also going back where we just put the yellow line, there's also buying pressure. So there's a big gap for buyers in this area. So we can't really use that as a like pinpoint idea. So you want to see if you can find more stuff. And at this point for me, I'm going to go down to the 4 hour, the 2 hour, and look at closer to now and see what I can find. Because if you want to use the cup and handle method again, with this right here, you can use the top of the cup, which was also a double top right here in this area. So knowing we had selling pressure and we finally broke out, if we pull back to this zone for support, we could rally right back up and make this cup and handle have a breakout. And then if we go back to the daily, it could break out of this resistance trend of higher highs and finally make that push. You don't know what could happen. Like, is tech going to be hot? Is Microsoft going to be on fire? Is volume going to be higher than usual? That's when you want to include more than just the idea of, oh, we're pushing green candles. So I'm going to put a little level in this zone. Not a pinpoint, just a good, like where wicks touch, candles touch. And I'll make this one red. So these two zones are what I see. Obviously, the yellow is right where we currently are. So it's not really like an indication to buy, a call, or a put. It's more so like we're in a zone right now, historically, that has buying and selling pressure. But when we're above the yellow, like I showed you the very first time I did this, there's buyers. So I'm going to keep that there just so I know in the yellow area, whether it's $2 below, $2 above, volume should be heavy, if not consistent. So I want to wait for a push or a drop. And if we do drop, I have this red line below, which was the double top for the cup and handle, the brim. That's going to be a solid area for calls if it has consolidation, if it has volume increase and it starts to curl its way back up. You can get a quick scalping, maybe a swing that's very light. That's one thing that I look for. I'm going to save the MDX, which is the NASDAQ. I'm going to save that for last with SPY, since those two kind of are similar, I would say, in a way. So I'm going to go to Netflix first for now. And Netflix is one of my favorite stocks. So I kind of have this memorized. So I'm not going to try and like dig deep with it, but I'm going to try and just keep it simple. So the overall picture I'm going to draw just to show you like what I watch as this happens. This trend is one thing I was playing the whole way up for the past year, year and a half practically. Every time I hit this resistance on the higher highs, I would get puts with time and just ride it back down. Obviously, I would not hold through this entire move. It's almost impossible to play the whole move. You just want to get your gains and get out. So I would size light and just wait for that reject. It's not going to happen every time, but historically, I mean, oh geez, it rejected here, it rejected there, it rejected there. Like, you see what I mean? You're going off historical data to make your probability of winning a trade higher. That's the whole point of trading. So when I saw that, as this formed like 2 higher highs, 3 higher highs, I started watching this a lot closer, and I would play this every time it came up. And as it dropped, I'd sell. I'd wait for the next push to get puts again. I ride it back down. I'm waiting. I'm patient. I don't care about the scalps within unless there's a solid setup. But when I had this going on, I was just living. Like I'd wait. Oh, it's touching the zone. Let's see what happens for a day or two. Oh, it's still there. Let's start a put position that's very light, and I can swing for like 2 weeks expo. As it rejects, I'm up 5%, 10%, 15. I can trim it or sell the whole thing. I like my small gains. I just want to compound my account. So with where Netflix is now, you're basically looking for buying pressure to keep it up, or you're looking for a break on the downside. And with buying pressure, this zone is the main thing that I'm looking at, mostly because that's basically where we touched about a week ago, March 13th. So now at this point, it's a weird spot. Do I want to try and see if it pulls back? Like, is it really going to pull back? Because when you're looking at the smaller frames here, you put a trend line right there. We're kind of holding this trend, which is now support trend. Before it broke out, it was the resistance. If you would have played this reject and tried to get puts, you would have got destroyed if you would have swung that because it broke out heavy. Obviously, it came back down, but you would want to trim or sell the whole position to limit your loss, basically. So now at this point, we're holding the trend on the upside. We're not going to reject it. We're going to hold it and possibly curl. So for me, where is a good support zone with buying pressure if it wicks below the trend and tries to push back up? Look at all these wicks right here. So curl is basically like, I'll just draw it right here. So this is a curl. Oh, geez. Is that the right? Hang on. My bad, bro. Give me 1 second. Where's this at? There we go. So a curl is basically like this. It's coming down, buying pressure. It's starting to curl, starting to make that curl, buying pressure. Now it's breaking out. That's basically what a curl is when I say that. So you're basically waiting to see like, okay, it's coming down. Is it going to have that like a cup? Yeah, I'll start saying cup instead. Is it going to have that cup formation? Are the buyers going to outweigh the sellers and it's going to pull it back up and form that cup basically? That's what I like to look for on trends, support. I wait on the larger frames for that cup to form, basically. So going off the wicks for a heavy support zone, I'm liking this right here. 298 a share. Psychologically, 300 a share is that's a big number, 300. So anywhere in 298 to 300, if Netflix can wick down to that level on Monday, I may buy some calls for either a day scalp if it can just pick up volume and push right back up, just like this. Say it wicks below, but then it comes right back up. That's one thing I'm going to look for. I like playing Netflix. I know how it moves. I know the average volume per day. I know how it trends. I know when SPY's green on the day, Netflix can stay red, but I'm looking for that reversal. So I'm always watching Netflix as one of my stocks. And this is looking very solid right now. Just going off this trend, the buying pressure right here with the red line. Historically, we got a few spots that also could be used for that same spot. I mean, around the 300 a share, we had a reject here. And then when we have broken above, we've held on the upside as well. So I'm liking this zone around 298 a share for Netflix. This is one stock I will watch tomorrow. And then this is NVIDIA. And just like AMD, I was saying earlier, chip stocks have been hot. Obviously, tech, it's in the tech sector. Tech's been hot. This is when I'm looking at, like, do I want to get calls on NVIDIA? I already missed the breakout. Do I want to see if it breaks out any more and basically chase it, I would say. If you're not already swinging and you're up on the position, getting calls here on the smaller frame, it's like, oh, it's going to keep going. You're looking at the 30-minute, oh, it's just going to keep going. Go to the larger frames and see if you can find an idea of like it rejects here every once in a while. So when I pull up NVIDIA, I'm looking at a reject to see like, okay, if I get a pullback, where can I load calls on a support when it makes a higher low? So I'm looking, I see a reject around this area right here when it pushed up last time. And then when it actually broke above, it had a huge green candle, but the selling pressure hit instantly. It consolidated at the top and it broke right back down. So I can use this area as a good observation level, not a pinpoint, just observation. So I'll make this red. And making that red, or I'll make it yellow because it's above. I like doing yellow and orange above for like the resistance. We're currently in that zone, basically. Like we tried to touch it, we came down. It doesn't have to be like exactly 265.25. Anywhere in that area where I just showed you back here, that was a heavy zone of a reject. So we're looking at this. I'm focused on this. If NVIDIA keeps the volume how it is and it keeps pushing, you can play the breakout for the upside. But for me, as my strong suit, I don't like playing breakouts. I like to wait for a pullback that has a lot of buying pressure. I want to see a support zone hold. So if you want to see a support zone, like what I would try and look for, where was it having a lot of selling pressure, but when it broke above, it would hold above practically. And basically, this zone is pretty heavy around that. This is a major drop, obviously, but 243, 250 a share. There was selling pressure when it would push up, but once it broke above, it would consolidate pretty well. It broke down below, obviously, recently before it broke back above where we are right now. But that's where you want to look even farther back. Like what actually made this do what it did? Was there buying pressure? NVIDIA has been zoning and it hasn't been this high before. So it's kind of iffy for me. I don't trade NVIDIA. I'm not good with it. That's not my strong suit. So it's hard for me to chart this as well, as you can probably tell by my words I'm using. It's hard to find anything. And of course, this right here was a heavy support zone, but we're well above that. This 220 a share area, 210 a share, there's no point in charting this because when you put a line here, which it's a good support, trust me, this is a good support, but we already broke out of that. Like that breakout happened. So there's no point in charting this until we finally come back down. That's one thing that I'm very big on. Don't put lines that are very far out that may not even matter until the price actually reaches that zone or that resistance, that support. I mean, so NVIDIA for me, it's rough right now for me to find anything. I mean, if there's a pullback, 243 a share, 245 a share, that's a good place to get calls, in my opinion. It's just very hard because it's just been breaking out. So I don't really have much to say about NVIDIA. If anyone has any statements or questions, please say anything. I'm hoping you guys are understanding and following, hopefully learning something, or at least seeing like a bigger picture for me, basically. So then QQQ. I had this falling wedge charted last week for you guys. I'm actually just going to delete all this and redo it, or at least keep the falling wedge going. So I was telling you guys how at this point, when the breakout happens, I like to watch for a pullback to the trend, which this didn't actually pull back all the way. So I wouldn't have entered this for calls, obviously. But for anyone that would have played the breakout of the trend and held for a swing, you would have made money on this. I mean, if you play the breakout and you catch it and you're up at the end of the day, you can swing a contract or two if you're sized heavy enough for that. And as of right now, QQ is, I mean, it's tech is hot. Everyone knows QQQ is the tech sector practically. So just looking at it for like a rejection, we have this zone right here. There's selling pressure. And this is basically a double top that happened before, and then it started the zone in this falling wedge practically. So now we're back up to that area, and that's around 310 a share, 311 a share. So QQQ is basically at the selling pressure. Like we're at that rejection. The question is tech going to stay hot? That's the thing you have to keep in mind. Can tech stay hot and keep pushing higher? If we don't and we simmer down, maybe FOMC has something going on, this could reject and come right back down to this trend, could break back inside the trend. Like that's the hypotheticals. You just have to play probability right now. And obviously the highest reward, lowest risk would be playing puts if this consolidates at the highs and it shows selling pressure and starts to basically go back down. It doesn't have that momentum to keep carrying it. So Q is kind of in a rough spot as well. Since I don't trade this much either, I don't have as much to say as I should. But even going off this zone with the selling pressure, it happened a few times back here as well. So that whole area shows selling pressure, anywhere between $308 a share to $310 a share. There's selling pressure on the QQQ. So that's like the zone I'd have for a reject, or to see if it can break above and then hold. Then it could keep curling to go up to like the 320s or even higher. You never know. So I'm on Tesla now. Tesla is still, I mean, so an inverted cup and handle, it's the same thing as a regular cup and handle that happens like this, but it's just inverted, which means it's flipped, it's upside down. And right now it's literally forming a bear flag, but like I said with everything else, if the market is hot this week, most technical like setups, the charts, the patterns, they're all going to be invalid because volume pushes everything. If Tesla has buying pressure, this bear flag is non-existent. It's going to push right back up. The pattern we're in right now with this inverted cup and handle, it is bearish, but we're holding with buying pressure where I put this in last week. This 170 a share is holding buyers. If we wicked below, we came right back up. And historically, that 170 a share, anywhere from 165 to 170, there's buyers. Tesla, we know how volatile this is. Buyers come in and it just makes everything go crazy. Tesla has volume. It moves so quick. It has fake wick outs. It's very unpredictable, but on the larger scale, you may see a picture that other people on the 5-minute may not see right now. And that's why I try and keep it on the larger frames for the charting and then take it down to the lower ones as I'm looking for plays to enter. And just going off the rejects for a resistance, Tesla has rejected this 186 a share basically for the last week. And if we use that same zone historically, I'm going to move this white line down and I'm going to make it, let's go orange. So this orange is what we're going to be looking at. Where historically has this orange had rejects as well? Or if it's above, it's had support to keep it up. So obviously we had a few wicks. They're not dead on with the zone, but these wicks held and they came down, pushed back up. We had heavy support here that held, but it broke back down about 3 days later. Heavy consolidation here. This was good, and it showed buying pressure. So we know overall there is action in between where I put this orange zone. 186 currently is the selling zone. Historically, it had buyers, so it was actually the support, which means buyers. Right now, we're at rejection. We're at resistance. What's going to happen this week with Tesla? This is honestly a good chart, but I don't trade Tesla very much. I know, I don't know if Kenny's in here, but Kenny loves Tesla, and I'm pretty sure he'll be watching it this week. Tesla has a good setup going on. And going off this area as well, we tried to break above it, but we just couldn't get it. So when it finally broke above, that's when you start to watch it. Like, can it hold support? Obviously, on this time frame where we're looking at right now, Tesla had no buying pressure after it broke above that 186. It fell right back through. So you got to focus on these. These are like the main two that I have: 170 for support, 186 for resistance. Those are the main two I'd be watching for Tesla this week. You can find stuff in between. I mean, if you want to go to the 30-minute, you can obviously put like a little dip right here. And I'm going to take these away and show you. I mean, we had wicks right here, buying pressure, fake outs, came right back down. Pre-market gap up, came right back down. But this wick on the downside at market open, we ran right back above that 170 a share. So the buyers are heavy at 170 a share or even down to 165 a share. We know this, not just because what we're looking at now, but I put these levels based on the larger frames. We know those zones are going to be heavy. So if Tesla dips massively down to 170, 165 a share, and it starts to hold on like the 30-minute, the 15-minute, and you see volume increase and it starts to have that cup formation, you can play Tesla calls on the upside. Like, use the zones in your favor. If you're a scalper, find zones on the smaller frames, but be patient and wait. You can use zones on any time frame. I mean, if you're on the 5-minute, you can use the white right here, 177. You can use that for Tesla. You can put a zone right here. We had open reject. We had pre-market high that broke out. We had a open dip right here, but it pushed back up, double top, rejected, failed right away. So we know there's buyers present here, but they're not heavy on the larger frames. That's how you can chart for scalping. If you want to just do like the day of, find stuff that has shown strength, but just be careful. Nothing is guaranteed. Just have luck in your favor. Have the probability in your favor. Low risk, high reward every time. So we got about 3 minutes left. I'm going to do the NASDAQ and the SPY. I am going to start with the SPY, though, just because I love this. I'm going to delete a few of these things as well. So I know I posted my chart in the Discord for SPY, and I'll show you what I'm mostly looking for this week. But you all see, obviously, the rise in wedge. We broke out of this on the downside finally. We tried to hold. I have a lot of highlights. Holy crap. We tried to hold off the support trend here, which we pushed, obviously. But once we came back down, we had that major drop the one day. Now we're slowly trying to climb back up with this bear flag forming. My biggest concern historically, I have noticed that we push upside into FOMC, which is this Wednesday. I am very skeptical that we're not going to drop right away. So I'm going to be seeing if SPY can recontest, which is now this resistance trend, and see if it rejects, if we get a nice wick inside the trend again, and then we come right back down. So I really want to short SPY like around 380, 398, $400 a share. If we get a nice like volume surge push, I want to short SPY. I'm not going to hold it during FOMC, but maybe after FOMC, if we reject, we could just start the downtrend now. We could fill the gap to 380, maybe even lower to the lower low right here. Oh, let me go to the daily. To the previous higher low right here on the trend. I mean, we have gap fills that are going to happen. Whether we go back inside this trend after FOMC, this trend right here, if we fill the gap and we're back inside this intraday trading, anything can happen. But I want to see SPY push for puts only because my risk will be smaller. And I may even anticipate calls going into FOMC. If we get a nice dip on Monday, which I think futures were up last time I checked, I may try and catch a dip on SPY if it even happens. I doubt it will, but I may want to try and catch a few calls with a light position and just ride those up into FOMC. That's a good trade I'm willing to put risk into. And then I'm going to do the NASDAQ real quick. So for those of you that don't know, the NASDAQ is basically, it's like the larger index, the S&P, the NASDAQ, the Dow Jones. The NASDAQ's one of those. So it moves not identically to the SPY and the Dow Jones, but it has its own formation. I mean, it moves in sync with green, red, green, red. I know, I think it was Thursday or Friday. The NASDAQ was the only one out of the three that finished green. S&P was red. The Dow Jones was red. I thought that was really weird, but that's one thing you have to keep track of. Do you think they're raising rates? So I honestly am not sure what they're going to do. And I don't want to say what I feel because overall, like a year or two from now, I think our economy needs to have a drop to get that stableness back. That's just how I feel years down the road. This week, I don't want to speak on anything because for all we know, there could be a lie in there. They could say we're going to pause rates just to boost the market again before they actually do raise them. There's so much speculation. So I don't like to throw ideas out because it's all assumptions at this point. I'd rather wait to see the actual data come out and then play the move off of what happens from what they say, if that answers your question at least. I'm very big on not speaking on stuff if I'm not 100% sure because I don't want to lead people one way when I'm not even leaning one way myself. Do I think they should raise rates? Yes. Are they going to? I am not too sure with all the banking stuff that's going on. That's the hard part, I would say, is with all the banks having the issues. Can they afford to raise rates right now? So going off the 4 hour with the NASDAQ, we got a trend here. It's not dead on. Obviously, people are like, well, how do you know to put the trend there if we had wicks above and candles fill above? I'm focused on where it touches the most. We had trends here. We had here, here, here. Obviously, we broke above, but we didn't break out. So we pulled back inside practically. Yeah, so he said, I just asked because you said you'd hold calls. So I would play calls Monday and Tuesday going into FOMC. I wouldn't hold anything going into the actual meeting. Historically, I've noticed, and I think others can attest to this, we usually push into FOMC. It's not a heavy push, but we like maybe $2-3 a day on SPY Monday and Tuesday. And then Wednesday, it's either uptrend or consolidation. Sometimes we have like a drop, but just going off like the past times, we tend to run going into FOMC. So I may look to see if the volume is on the buying side. I may buy a call or two for Monday and Tuesday, not the actual meeting, if that makes sense. I've never held anything during FOMC, during CPI. I'm too scared. And I'm very like, I like plays that I control. One little word, anything can happen. So I don't want to play something like that unless I'm sized so light where if it goes to zero, I'm fine with it. My emotions aren't going to like interrupt anything. I'm not going to be depressed after the day's over. I just want to finish the day calm. And I know I took trades that I knew could lose, but I limited my risk. And that's why I'm not upset about it. FOMC data reports, it's not guessing, but the risk is so high because anything can happen. I just like the run-ups. Usually calls goes on your favor because going into FOMC, the market tends to have a little uptrend. That's just what I've noticed. I don't recommend it, but that's what I have noticed. I'm going to chart this real quick and I'll answer any questions you guys want after this because I do want to get this over with so I can stop the recording and then we can talk for a bit if you guys want to. So the NASDAQ, obviously, I'm looking at this trend reject once again. If we get a nice push, like I said, SPY may push into Wednesday. NASDAQ's going to follow. So possibly I'll look at this and see if I can find anything that may correlate. Why does it keep happening? Find anything that may correlate. So if SPY has that run up, NASDAQ will also. And this is all hypothetical. Just going off the trend, this reject could tap out again. So I may see like if this can push, I'll get puts up here. Not for the NASDAQ, but the overall, because I don't trade the NASDAQ. I'm just charting it for you guys. And then going off the smaller frames, like this trend's what I see on the main. If you want to go back to look at this stuff, you can, but I don't really see much of an issue or reasoning to go back this far. I mean, we had maybe a triple top in this zone. If you want to put a line here, you can. We had a wick above, but we came right back down. We had a reject with selling pressure. We tried to break above again and failed. Once we finally got above, we held with buying pressure here, held with buying pressure here. So if you want to put a line here, you can. This shows historical reasoning. So that'd be fine to do. Then go to current times, correlate to see what happens. So almost in this zone right here with this yellow, this reject on the rising trend, it's almost right there. So if we would have noticed that before these days started to form out, we could have looked like, okay, it's consolidating here. We have to see if it either breaks out and catch the pullback, or maybe we reject, we can play puts on the downside. Because with all this selling pressure, it couldn't break out right away. It kept holding though. So you know there's buyers at the bottom of this. You also know there's a heavy zone historically on the upside with the rejection. But if we go down to the 30-minute or the 15, you can almost see a curl right here. Historically, on the smaller frame right, on this size right here, there were sellers with wicking out anywhere in this zone, basically a triple top. And once we broke above, who was the one that said the thing about the candle? Was it you, Johnny? Yeah, Johnny. So this is a good example right here, what I mean with like a cup forming, like the curl. So you have previously it couldn't break above. Rejection. Once it finally got above that resistance, it's now acting as support since the stock is above. So as it went up, I'm going to extend this so it's a little bit bigger with the candles. So as this went up, it had selling pressure. It came back down. I'm focusing on, okay, historically, not even a few days ago, it couldn't even break above this zone. So I'm going to see if it holds. I want to get calls. We wicked below, came back up. Wicked below, came back up. There's no rush. Don't think you have to force a play. If you miss it, you miss it. Wait for the next one. But with all these candles forming, your risk for getting calls at this point is so minimal because you know, okay, if it does wick below, my sell is going to be at the bottom of these wicks practically. Like if it sells under and it holds, you can sell for a loss. But just going off the buying pressure, I don't know what the tape was doing. I don't know how it was moving in the like actual live time for this area right here. But just going off what we see now, size light, get a call, boom. Obviously not the NASDAQ because these contracts are expensive. I mean, I don't trade the NASDAQ. I'm just talking like if this chart was for any other setup with AMD, Meta, Apple, Amazon, Facebook, Meta, Netflix, anything. This is that curl / cup I was telling you about. This is what I look for. I'll size light for calls and I'll add time, maybe a week or two expiration time on it. And if it does work out, look at this. This thing ran. It ran. This is a setup I love. Historically, the rejections from resistance won't break above. Once it finally breaks above, I wait for that pullback. And I won't load, but I will get calls if it holds and consolidates and buying pressure increases. You can get calls and hold. This is a perfect example right here. Perfect example. You had a resistance to support flip. Buying pressure came in. It couldn't break above before. Once it did, sellers came in to drop it back down, but buyers took it up instantly and held it. That much consolidation. The buying pressure had to have been heavy on the tape. Overall, this is like, I'm going to get a call. I'm going to size light and I'm going to ride this up if it goes my way. And if you get more than one contract for like, say, NVIDIA or AMD for a setup like this, trim at the high. Don't hold for the breakout. Trim a few because this could double top, triple top, and come right back down. always trim as your play goes in your favor if you have multiple contracts. If you don't have multiple contracts, you're going to have to sell the whole position and just be content. If you sell one contract, that's all you bought, and it does break out, you can't let this idea of, if I have another play just like this, I'm going to hold for the breakout. Because the one time you do hold, this breakout may not happen. Then your mindset's destroyed. Like, dang, should I sell at this next triple top? Should I sell? Should I hold? Just secure profits. That's all you have to do as a trader. You have to win. You have to sell. That's it. Make money, get out. Don't try and catch the move until you can actually size contracts to trim and hold a runner. If you have a small account, you need to take the profits when you have them. And I'm going to leave it at that, and I'll answer questions. So Victor said, do you play FOMC after you see the trend? So usually I'll watch Powell talk or whatever, or whoever talk, but I'm very big on, like, if I can catch the move going into it, I'm more happy with that than playing the results after, because I've seen, I'm going to answer this, then I'll probably stop the recording. I've seen like the market, I've seen CPI or FOMC. It makes the market come down within an hour or two. You're right back where you just were before the drop, or high of the day, or you send right away on the upside. And then within an hour or two, you come right back down to low on the day. So usually I'll play like the day after, Thursday, Friday. I'll play the move going in. I'll play the day after, 2 days after, but I never hold during any results. CPI, PPI, jobless claims, the housing market. I don't do none of that. I want to play a setup. I don't want to play one word can change the whole move on the play. I don't like that kind of stuff. If you're right, you're going to make a lot of money. But if you're wrong, can you afford to lose that much money? That's the question you have to ask yourself. I personally don't want to play those kind of things. That's just how I am as a person. Does anyone have any questions related to charting, zones, anything before I stop the recording? We can just talk about whatever then. Any stock you want me to go back and re-show? Any question you have about a zone that you see that you want me to talk about? I like that perspective. Thank you. Yeah, definitely, man. Definitely. Everyone's saying no. So how do you apply volume indicator? So for me, I don't usually use a volume indicator, but the one thing I do like to have on is this. Oh, no, not these. Hang on. I got to right click. So it's called overlap volume on Webull. I know other platforms naturally have it on their charts, but I'll use this for volume historically. And basically, like, if I have it on the 1 hour, the way this works is just like how the candles move on the actual stock for the 1 hour. The volume on this is the same exact thing. So each candle is 1 hour of like volume basically. So the taller the candle, obviously for volume, the more volume that there is on that 1 hour increment, which we're on the hourly time frame. I'll use this, but it's not accurate, obviously, because you're just seeing like historically, oh, heavy volume, light volume. But when you're looking at something like, let's go to NVIDIA and let's go to the daily. So we can see that this last Friday was the most volume we've had since the previous breakout, which this is probably this was earnings. We had huge volume after earnings. We just had the biggest candle since the earnings report, and it was selling pressure. It's not like, oh, it's going to keep going down. Oh, it's going to go up. It just gives me an idea of like volume was super heavy Friday. Let's see if Monday has the same volume at close on the daily. Because if we have light volume, but we hold this level, there's more buyers than sellers keeping this up. So going into Tuesday, into Wednesday, you can try and determine like, okay, if volume stays consistent, we could have a slight run up. And if we catch a huge volume candle, even on the 1 hour, the 30-minute, whatever it is, I use that as like volume's increasing and we're slowly curling, buying pressure is heavy. I'm going to try and catch calls on this. I'm going to try and find a way to get in on a pullback to get calls. I know a lot of people, they'll use like the MACD, the MACD, they'll use actual volume analysis stuff. I don't really use that. I like to watch the tape live. And obviously the tape is just the time and sales, the level 2. I have studied that for months because of Rippy God Hassan. I learned from him, and it takes a long time, but it does help if you're a scalper or just looking at overall volume at a zone. Like if NVIDIA has a pullback to 243 a share, I watch the tape to see, okay, where are the buyers at? Like, where are the heavy buyers, like 10,000 plus shares, 100,000 plus shares? Where are they buying at exactly? So I have an idea. That's what I tend to use. I like to have this volume thing on the bottom only because it gives me an idea of like, oh, volume was heavy this day compared to now. The last time we had this much volume in a day was so and so months ago. That's why I like to use it. Hopefully that answered your question. I don't tend to use indicators outside of like the VWAP. I just like to play zones. I like support and resistance. I like trend lines. I like a few patterns that I successfully have used historically. Cup and handle, inverted head and shoulder. I don't like the regular head and shoulder. You play market structure. Define market structure. You just mean like the overall, like setups and everything. So you're educating me now at this point. There's some stuff that I don't know the actual terms to. I kind of just know it by how I know it. Yeah, so lower highs and all that. What was the example? QQ, no, Netflix. So Netflix on the daily for market structure on this, I'm using the higher low or the higher highs for puts. Every time a higher high forms, overall, are you bullish? Overall, years down the road, I am bearish, but for some reason, I just feel like they're gonna pause rates or something. I mean, I don't know. I just think it's too obvious to raise rates now with how bad the banks are doing, if that makes sense. I mean, it's all hypothetical guesses right now, but I'm very skeptical on what's going to happen. That's why I'm not very like bearish or bullish this week. I'm kind of just going to watch the charts and see what happens. Like I can trade all week and I'm not going to do anything. VWAP settings. The person said VWAP saying, do you use Weeble and you want me to show you how to do it? Or like, do you mean the actual like numbers I use with the VWAP? Because I use VWAP like I'll use on the 5-minute, the 15-minute TOS. I don't use TOS, so I'm not too sure, but I can have Jarvis show what he does because I think he uses that, or I can find someone in the Discord to show you. I'm going to read this since Rocky's a good person. He said, "Thank you so much, brother. This means a lot. I used to never understand market/trading language, and most of the time, YouTube videos or any trading chats never used to make sense. Today's class, I was just able to understand everything you told. Not telling I'm an expert, but I'm definitely better than yesterday. One step at a time, just trying to be persistent and patient. Thank you for playing a part in my journey, bro. I appreciate you. The same way you feel is the way I felt about my mentors, everyone that taught me, people that gave me advice. So it's a blessing to be like this for someone else now. Any questions, just reach out to me. And one last time, I'm going to ask this, but does anyone have any questions about support, resistance, trends, patterns, indicators, anything real quick? Because I'm pretty sure that was people got the question. Price action over indicators. Me personally, as a trader, price action over indicators every time. But that's just me personally. Everything I say is a personal biased opinion. If you ask anyone else, they'll say indicators only, 200 EMA, like that's just how they are. But for me personally, I always use price action. Charts never lie. That's what I live by. Charts never lie. Yeah, it is also a preference. I mean, whatever, the way I explain it so everyone understands, whatever works best for you historically with the hit rate, like wins are higher than losses, you have to do that. I mean, like Johnny just said, some people use tape and don't even look at charts. All they do is read tape. And that's basically what Hassan does. Yeah, I'll see you tomorrow, man. Have a very patient week and don't rush. Don't think you have to make money this week. We got next week and the week after. We got next year. Longevity. Yeah, I'm going to pause this and I'll stay in here for a bit with you guys.